Hey everybody, it's Pete Renzulli at T3 Live. This is actually the headquarters for T3 Live, and it actually happens to be my trading station where I do the mentoring in the morning for the first 90 minutes. I want to just touch briefly on something that's kind of one of my pet peeves, and has been for a long time in trading, and especially when I'm doing mentoring. And it's in reference to knowing what kind of trader you are and not trying to outtrade your resources. And when I mean resources, I'm specifically talking about your experience and your skill level. I think it's a lesson that everybody can take into the market immediately. We had a big spike in volatility on jobs numbers, unemployment numbers, and I immediately started to get some feedback, emails, and both direct messages in the private VTF in reference to people in their own terminology freaking out of how they were going to manage their positions on the initial move after the 8:30 announcement. Now, the point that I want to make here is, if at any point you feel like you're in a situation where you would be freaking out over a reaction from a news story, you're immediately telling yourself that's not the trade you should be in because you haven't planned for it. Any professional trader, which is what I'm sure a lot of people would aspire to be, or anybody who has the desire to be taking money out of the market consistently, should always know what they're going to do before they need to do it. Now, you can call that discipline, you can call it whatever you want, but the bottom line is, as soon as you feel like you don't have control over what you're doing, you should not be in that position at all anymore. So most people, rightly so, want to gravitate towards volatility because that is, quote unquote, where the money is, when there's a lot of volatility. But everybody doesn't have the same skill level to handle certain volatility. So you have to make sure that you open the right trading business for yourself and attack the same opportunities that match your skill level, your risk tolerance, and the amount of money you have in the market. As a mentor, if you ever told me I'd be freaking out over an initial move, the first thing I would be telling you to do is that's not the right strategy for you, or you shouldn't be in that trade in the first place because you're not prepared for that volatility. So you have to step up to the plate and be involved in the right business for yourself from a trading perspective, which means trading the right stocks, the right volatility, and more importantly, the right strategy that matches what you can handle. Don't try and outtrade your resources, and never forget your skill coming into the business is a resource. So you have to attack the right opportunities for what you personally can do. So if you're ever sitting in a trade and say, I can't handle this, I'm not sure what I'm supposed to do, let me go and ask somebody else what I'm supposed to do, you're in the wrong position. It doesn't mean you can't eventually handle that. It just means that you have to get to the point where you can handle that particular type of idea. So you have to plan that prior to the trade. So a lot of people go to volatility right away. Ask yourself before you gravitate to the apples or trading news or whatever it happens to be. I'm not saying it's not a strategy to attack. I'm asking you, can you handle that as your initial foray into the business? If the answer is coming back, I was freaking out over the news, it just means you either have too much size on, or it's the wrong position or the wrong strategy for what you're doing right now. Always make sure to come into the market with conviction. And the only way you have conviction means you have a strategy that you believe in, something that you know in your head, or it's played out, whether you've back tested it or whatever it happens to be, has a high probability of one thing happening over another. So strategy always comes first, and the only way to have conviction to come to the market every day where you expect to make money, doesn't mean you will, but you expect to, is because you have a strategy you believe in. So if you feel you're in a position you're not supposed to, you don't know what you're going to do next, it just means you're not trading your strategy. So I just had a conversation with somebody yesterday afternoon telling me about a trade that he heard somebody else called out that wasn't a part of his pre-market game plan. My advice to this person was, don't trade anything you didn't plan to trade. Stick to earning money on stuff you plan to trade, and if you want, maybe a little bit down the line, you can go after something like an 8:30 number and be involved in it. Maybe then you can get to that point. But prove to yourself you have a strategy that happens more often than not, and more importantly, you can follow that strategy so you have conviction and confidence, and that will ultimately lead to you adding more strategies to your pool. Experienced traders have more than one strategy. It's not necessarily the same thing all the time. There's trending markets, not trending markets, and that kind of stuff. News plays, news catalysts, earnings, whatever it happens to be. The key to this, though, is it has to be definitive of that's how you're going to choose to allocate money to the market. So anytime you're in a position and you feel like you don't have control over what's going on, it simply means you're in over your head for that particular strategy. So take a step back, write down what your strategies are, and then look for those opportunities in the market. Don't just gravitate to volatility. Volatility is awesome when you can handle it. Make sure you can handle it.